All right, guys, welcome back. Another video. I want to go over, I think one of the most common issues I see with a beginner trader, and it surrounds getting a good fill price at the entry and also getting a good fill price at your target or your exit for your trade, right? So a lot of people have FOMO. They like to chase. It's just human instinct. They see a move happening, to the downside or the upside. Maybe it breaks a level that they have charted out. Essentially they end up buying at a price that's not ideal for the move, right? We're trading options. We're not trading shares. We're trading options. So obviously IV affects, our contract premium. So if you buy, let's say for instance, you buy an option contract at the top of this wick right here on this green candle pushing up, and then you start to get some drawdown, you're going to go down pretty significantly very quickly because you got a horrendous fill price, right? And then conversely, we know when you're pushing into a target, you want to sell into the target. You don't want to wait for it to go hit the exact number. I think that's another common issue that some people, maybe greed is setting in on that trade or something. But trading is all about price and the auction process and stuff. You want to get the best fill price on the entry, and you obviously want to get the best price on the exit, right? So how do we do that? Well, for me, and this comes from me honestly from trial and error, is me purchasing contracts. I'm way overpaying for them. I'm chasing stocks, left and right, to the downside, to the upside. And I started to really just, really dissect my trading and, what I'm doing wrong and stuff. And why am I losing? The trade is going in my favor. Why am I losing? Why am I getting stopped out? A bunch of things were coming into play with what I was trying to do. And so I really just stopped trading. I sat back and I started watching charts and stuff and watching how they work around, key levels and certain prices and stuff. And I started to understand how the market works. The market doesn't just go down in a straight line, and it doesn't just go up in a straight line. More often than not. Obviously, there are times where the market just decides to go parabolic, and I'm not referring to those. I'm talking about the overall, the normalcy of how the market decides to move up and down is usually in a step manner, right? It's usually, coming down. This is a pretty straight line down. This was actually FOMC, but usually the market likes to make steps up or steps down. It doesn't just fly in one direction. So if you understand the context behind how the market actually moves, well, then it can help you get a better fill price and understand that this is just how the market moves. This is the trend, but the market is going to step in that direction. It isn't going to just fly there for you. So if that's the case, how do you get a good fill price? Well, this is a trade that I took in real life. I'm just showing you, in hindsight. But I did take this trade, and my thought process behind it, I want to share with you, and maybe it can add some context or some insight and hopefully make you a better trader. So you can see I have support drawn here for the stock. We're watching Tesla on a 5-minute chart. As it comes down into support, it breaks it. You can see the body hold that level. You can see the retest as it becomes resistance, and then the breakdown. And then you can see it get tested, rejected, and then it breaks above it, right? Now, at this point, for me, the stock has my attention. The old me would have said, "Oh, we're breaking out. We're reversing. I'm getting long." Immediately, and it would have worked out for me in this instance, obviously. But let's say the stock, just kind of consolidated and slightly moved up. I might have had break even, maybe small profit, maybe no profit, right? That's how I was trading. So this trade, as I said, resistance became, or support became resistance. In this instance, now I'm looking to flip once again. So we break, and I'm waiting for an entry. I want to get long, but I want to ensure that I'm paying the best price for the option contract, right? Just like anything else in life, you want a good price on everything. Why don't you want a good price on your options contract? Well, I do. So that's why I wait. I like to be patient. I don't mind if the market does just fly right to my targets and I miss the entire trade. Well, I missed the trade because I understand that more often than not, the market is going to move in steps. It's not just going to fly, like I said, right? So if that's the case, I'm going to wait for a retest. We break, We come up, we start to push down. I'm liking it. I'm still wanting a retest of this support level that we had here. I don't quite get it, but I like to buy calls on red candles and I like to buy puts on green candles. There's a psychological thing for me that makes me feel like I'm getting a phenomenal fill price. That's what I'm after. As soon as this candle starts to push down red and then I see the wick starting to form, I get long. And because of me getting long at this point, I'm ensuring that I get a good fill price. I have a tight stop loss. I'm in almost absolutely zero drawdown in this trade, right? I immediately go into profit and then we push right to our target. Now, my first two targets were achieved, which were just the open. That day's open was my first target. Sold about 80% of my position there and then held to my next target. So what do I mean by getting a good fill price at your exit? Well, very similar to your fill price at entry. I don't want you to wait until it goes and it exactly hits the price that you have charted, because you have to figure some people may have their resistance line, something like this down here, or counting the wicks or whatever. It becomes subjective in that regard. So we know that essentially this price area right here, if we look at all of this, is very attractive. We know that. So as price begins to push into resistance, and I mean pushing right into, when this candle is moving with some aggression towards my area of interest, I'm going to limit sell my positions into that. What's going to happen and I trade on TOS and I get pretty good fill prices. What's going to happen is if the stock happens to pop in that instant right to that top like that, and I limit sold right into the move, it's going to fill me at a better price. It's not going to fill me right here exactly. If my contract premium happens to pop in that instance, I'm going to get filled at a better price. So that's what I do. I don't wait for the stock to go and hit resistance, because obviously we can easily reverse right off of that, right? So I'll lock in some profit as we push into it, right? I know I'm looking good. See a little doji form, and then we push right again. And then here we go. Right when we push right to my resistance level, I exit my position right here fully. And yeah, so I don't give it a chance to reverse on me, is the thought process. I actually did hold one runner and then ended up selling that for still some profit, but I think the stock ended up over here somewhere right at support again. But nonetheless, that's what I want you to grasp from the overall trade is I want you to ensure that you get a good fill price. And there's only one way that you can ensure to get a good fill price, and it's the word patience. Be patient. Do not chase the stock. If this thing, let's just say for instance, I got filled on my calls, we'll say right about where I did, which is somewhere like right around there. And then the stock reverses on me and my stop loss is, say, the lows, or maybe it is this support line, depending on how aggressively it breaks it. Who knows? But let's just say I stop out at either one of these. My entry was at 269.80 versus where my previous entry probably would have been at this 270.91. So $1.11 more, right, than what I paid. Options, I trade 30 delta contracts. So, we're talking the difference of $300 here for me, minimum, at the very minimum difference if I'm buying 10 contracts, right? Now, if I'm stopping out, if I'm entering here and I stop out down here, well, obviously I'm losing less money than I would if I chased the stock and had to stop out because of a bad fill price, right? That's why I don't mind. I think people get caught up in seeing red and they're like, oh my God, the stock is starting to move down. It's probably going to reverse and dump. That's not the case always. This is how the market moves. It likes to move in steps. We move up, we step, we move up, we step, we move up, we step, move up, step, and so on and so forth, right? So practice this, back test it, look at your charts and look at, maybe go back and look at some trades that you took and where you entered at and compare it to what something like this looks like. This should help you. I hope it does. It's been paramount for my trading in the past, and it's the way that I trade every single day. All right. Thank you, guys.